Charlie Munger, investment genius. Warren Buffett's perfect partner. On November 29, 2023, The Washington Post reported that billionaire Charlie Munger, vice chairman of Berkshire Hathaway Group, right-hand man of Mr. Warren Buffett and a friend of more than 6 decades, passed away in California, USA, aged 99 years. Most young people know Warren Buffett, but few know that most of his successful investments over the past half-century have featured Charlie Munger. In the American financial world, Charlie Munger is a mysterious phenomenon. He is a compatriot, a close friend, and also a powerful arm of Warren Buffett. Warren Buffett once said, "The greatest architectural work in Charlie's life is designing the Berkshire of today. The plan he sent me was very simple. Stop worrying about how to do it. Buy mid-range businesses at great prices. Instead, buy a good business at a reasonable price." How did Charlie, who was trained to become a meteorologist, become Charlie Munger, a smart investor in the stock market, Warren Buffett's right-hand man? Who is Charlie Munger? Charlie is Buffett's compatriot. He was born in 1924 in Omaha, Nebraska. Tycoon Bernard Baruch was then considered the king of Wall Street. Stocks become a hot topic as people flock to it. Charlie's father is one of the leading commercial lawyers in Omaha, and his client list includes many of the state's wealthy businessmen. Charlie spent most of his teenage years reading books, while his peers were only fascinated by video games. Charlie Munger's boyhood. Warren Buffett and Charlie used to study in the same grade, in the same high school, even though they were 7 years apart. In fact, one of the first jobs Charlie ever had was working for Warren's grandfather at Buffett's grocery store in the neighborhood, a store that still stands intact in the heart of ancient Indy. Buffett grocery store is where Charlie took his first step into the business world. He learned how to take inventory, arrange shelves, please gods, the importance of coming to work on time, how to get along with colleagues when handling common tasks, and of course including how to operate the cash register. After graduating from high school, 17-year-old Charlie pursued a career in mathematics at the University of Michigan. However, after just 1 year since Pearl Harbor, Charlie, now 19 years old, decided to leave college to join the United States Air Force, sent to Caltech in Pasadena, California. Charlie soon turned his interests from mathematics to meteorological research, while teenage Warren Buffett was busy with odds and probabilities at the Xarbenoy racetrack just a few minutes bike ride away. Charlie Munger learned about an important investment technique in his life when playing poker with his fellow soldiers. That's where he learned to let go when the odds of winning are not high and bet a lot when the odds are positive. This strategy was later applied to the investment field, demonstrating Charlie's intelligence and creativity from a young age. After the war, Charlie Munger successfully completed his studies, graduated with honors in law from Harvard, and left school in 1948. So the question here is how a boy who pursued law and never took any college courses in economics, marketing, finance, or accounting became one of the greatest businessmen, a genius investor of the 20th and 21st centuries. Career path. Charlie Munger left university and began an impressive career journey in Los Angeles, joining a prestigious law firm. Through solving the complex problems of 20th century Fox, mining in the Mojave Desert, and real estate transactions, he accumulated a wealth of experience surrounding these fields. It was also during this time that Charlie realized that if he only continued pursuing law, he would never become truly rich. He needed to do something different. Meet Warren Buffett. In the summer of 1959, while in Omaha to resolve his father's inheritance issues, Charlie met 2 old friends at the Omaha Club, a private club in the heart of the city, where businessmen often come here for a snack in the afternoon, a drink, and a cigar in the evening. They decided to bring along a friend of theirs who ran a company they had invested in and were sure Charlie would be interested in meeting, a young man named Warren Buffett. According to all sources, the 2 sides were impressed by the other's understanding almost immediately. Through discussions about stocks and business, they found harmony in thinking and decided to cooperate. Munger's wife at that time, Nancy, asked her husband, "Why do you care about him so much?" Munger replied, "You don't understand. That's not a normal person. And that was the beginning of a long-term and highly beneficial relationship. Considered a close working brotherhood, after Charlie returned to California, he and Warren spoke on the phone every week for the next several years. Finally, in 1962, Charlie founded an investment company, in which he partnered with an old friend who used to play poker with him. This person is also a trader at the Pacific Coast Stock Exchange. He also opened and operated a law firm including Munger, Tolles, Hills and Woods. Within 3 years, he paused his law-related activities to focus on investing full-time. Become a famous investment genius in the American financial world. Charlie's first foray into investing was with British Columbia Power BCP. He impressed investors through a bold trade, implementing a price difference contract with British Columbia Power BCP shares. At that time, this company's shares were selling for about $19 and were about to be bought back by the Canadian government for more than $22. Charlie predicted correctly and won a large difference with the investment capital for this deal, including all of the company's assets, his own money and the money he borrowed. His acumen in this trade produced remarkable success. During the 1960s, along with Warren, Charlie focused on researching investment opportunities appearing in the pink sheets. They discovered Blue Chip Stamp, a stamp company, and through a difficult process, they took advantage and took control. Although Blue Chip Stamp later fell into recession, under Charlie's leadership it still took advantage of surplus capital to buy back Charlie Munger's stock and make other shrewd deals. In 1968, Charlie, Warren, and David Sandy Gottsman founded a diversified retailing company DRC and acquired the Hochschild Con chain of stores. However, with extensive experience, they quickly realized the risks in the retail business and decided to sell Hochschild Con. Charlie learned from these failures and saw the value of investing in deals with low capital requirements and free cash flow. From 1961 to 1969, Charlie's hedge fund showed an astonishing average annual return of 37.1%, despite facing the crisis in 1973-1974. Charlie Munger still maintained his sharp thinking in investing. After closing his investment fund in 1975, Charlie continued to cooperate with investor Rick Guerin and participated in the New American Fund. In 1977, New American Fund acquired the Daily Journal Group for $2.5 million, with Charlie holding the position of president. The Daily Journal Corporation is a California publishing company whose primary publications are newspapers and magazines, including the Los Angeles Daily Journal and the San Francisco Daily Journal. The shift from law and meteorology to finance opened new chapters in his investment career. Smart decisions and acumen in identifying opportunities have laid the foundation for Charlie Munger's success and reputation in the world of investment and business. Berkshire Hathaway. In 1979, Charlie joined and became the first vice chairman of Berkshire Hathaway. Berkshire Hathaway is Georgia's largest private company where Warren Buffett is currently chairman and CEO with a current market capitalization of $780 billion. In 1983, Blue Chip Stamp merged into Berkshire Hathaway. Charlie took over as general director of Wesco Financial Corporation, a subsidiary of Berkshire Hathaway. Holding two important positions has enabled Charlie to support Warren in the process of making the right investment and management decisions, contributing significantly to bringing Berkshire Hathaway from a corporation with a net income only $148 million and a stock price of $1,272 share in 1984, growing into a corporation with a net income of approximately $24 billion and a stock price of $210,000 share as of 2016. Mr. Munger never officially retired from Berkshire Hathaway and would have turned 100 years old on January 1, 2024, in a 2017 interview. Billionaire Buffett noted that Mr. Munger had changed his views on investing for the better, commenting on Charlie's enormous influence on his investment style. Over the past half-decade, Warren confided, unlike Ben Graham, Charlie didn't just teach me to buy bargains. This is the influence. His influence on me. Charlie's powerful influence has broadened my horizons like never before. That, nothing else, is Charlie's inner strength. Charlie Munger's challenging personal life. According to Forbes, Munger has assets of $2.7 billion. During his lifetime, he lived a simple life and often drove himself. However, in the last few years of his life, he had to use a wheelchair. Not only famous for investing, Charlie Munger is also a generous and philanthropic billionaire. While his friend Warren Buffett is always on the list of the world's richest people, Munger rarely appears. Munger would have had a net worth of more than $10 billion if he had kept all of his Berkshire Hathaway shares. Munger has donated hundreds of millions of dollars to educational institutions, including the University of Michigan, Stanford University, and Harvard Law School. Munger's condition was that the school needed to accept his building designs. In October, he donated 77 classes shares, worth about $40 million, to a library. However, Munger's life was not always smooth. At the age of 29, his first marriage ended. The wife gets most of the assets, including the house. Munger's friends said he lived in poverty afterward. Munger threw himself into work to overcome financial difficulties. But just a year later, his son was diagnosed with leukemia. Munger had to shoulder huge hospital bills. His son's death then left him devastated, at a time when everything seemed to be against him. The failed marriage, the financial breakdown, the loss of his 9-year-old son, but not accepting defeat, Charlie still tried his best. The challenge with Munger has not stopped. At age 52, he suffered from cataracts, but the surgery failed and left him unable to see in one eye. From there, Munger learned Braille to adapt to his new life. Not only is he an example for small investors, Munger is also a guide for Buffett. Although they both follow value investing philosophy, Buffett said it was Munger who urged him to focus on great companies at reasonable prices, rather than average but cheap companies. Some advice from Charlie Munger for investors. What Munger observed about the world was also recorded in the book, The Wit and Wisdom of Charles T. Munger. I was raised by people who always thought you needed to work as reasonably as possible. That perspective has helped me a lot, he said at the 2020 Daily Journal shareholders meeting. This 96-year-old billionaire has shared a lot of useful advice with investors. Below are some of his useful tips for new investors entering the market. Tip number 1. Don't just focus on the numbers. According to Charlie, if an individual investor focuses too much on numbers, it is like a student trying to do the job of a professional. You're just trying to project a series of numbers so that they match actual past results and seem reasonable for the future. The company's CFO, is more than capable of drawing dream numbers, with business results growing steadily over the years. If you only use them to predict, you will immediately fall into a trap. Therefore, every day he always spends hours reading and analyzing financial reports carefully to find unreasonable things in the drawings given by CFOs. People are calculating too much and thinking too little, Charlie said. In his opinion, learning about a business will include both qualitative and quantitative elements. It would be foolish if you only looked at financial indicators such as revenue growth and profit margin to calculate and forecast for the future. Instead, you should ask questions like, why is that company outperforming its competitors? In the same industry, does the CEO have any plans for growth in the next 5 years? What is the biggest risk of the business? Only after truly understanding the business will the numbers you forecast make sense, and then you will also be more confident in holding shares. Tip number 2. Get confusing stocks out of your head. Investing is a time-consuming and physically demanding job, and Charlie always tries to avoid spending too much time on obscure stocks. When looking for investment opportunities, I always divide them into 3 baskets of stocks. Yes, no are very difficult to understand, he said. If you think of Warren Buffett's concept of circle of competence, you will see many similarities between the two people, like Charlie. Warren advises us to stay within our circle of competence, ignoring other investment opportunities if you don't really understand them. And this is also the reason why I ignore real estate businesses with complex models, or businesses with revenue coming from exports such as textiles, garments, seafood, etc. It's not that those stocks don't have opportunities, growth, but because their output markets are located far away in Europe and America, they are actually too difficult to predict. Tip number 3. Stay calm. One of the points that Charlie Munger emphasizes is to calmly wait for opportunities and only invest in things of which you are most certain. For him, under normal conditions, most money cannot be traded continuously, but can be waited for. That means he spends most of his time stalking prey instead of buying and selling a few stocks. Instead of calmly waiting for negative information to come to the business, those with a weak heart will sell off, and not won't you have the opportunity to own good stocks at bargain prices. Just stay calm, opportunities will come to you. Tip number 4, always ask questions. Admittedly, we always tend to love stocks too much, especially when they are making you profitable. However, Munger advises investors to be cautious and constantly question their investments. You must always be careful of threats from competitors, especially when it is a business you love. Like most, there is nothing wrong if you are always confident about your business's ability to succeed. But that confidence must have a solid investment thesis. Don't be afraid to admit mistakes if your business isn't going in the right direction or a competitor is knocking your favorite business out of orbit. Epilogue. Although his personal life was full of difficulties, with his talent and energy, Charlie Munger left a deep mark in the financial and investment world. This is something we should all learn from him. No matter what adversity, as long as you always seriously try, sweet results will come to you.